Welcome to the Art of Procurement podcast with your host, Philip Eidson. Here, thought leaders share the trends, strategies, and tactics that you can use to elevate the role of procurement and your career.
Hi everybody, happy Friday if you're listening to this on its release date, and welcome to another Art of Procurement show. So I hope that you've enjoyed the show earlier in the week, which was with Elliot Knudsen of Tamer, who was talking about data science. I really think that having a complete picture of your spend, it's truly fundamental in terms of a building block in developing that high-performing procurement capability that we're all seeking. But I know it's one that many companies struggle with, and I've definitely been there myself. What I thought was particularly insightful in the discussion with Elliot was steps that you can take to start building some of your data analytics capabilities without necessarily having to invest a lot of money in a more out-of-the-box solution. And again, from being there, it's an area that it's often difficult to make the case for investment. Showing that you are able to pull data and kind of showing an ROI with it without making that investment actually helps you then make the case for future investment. So I would definitely recommend that if you didn't get a chance to hear the show, you can check it out by going to artofprocurement.com/data. Now, before I go into today's topic, I do want to remind you about the report that I recently published, which is the 21 tips to help you secure your dream procurement job in 2016. And it's a summary of really the tips that were shared with me across the entire job search process by experts in the field during Art of Procurement interviews. I know that I've talked about this for a little while. I do because it really still continues to be popular week after week. I see a lot of downloads for this report. So if you don't already have your copy, then what are you waiting for? You can download it at artofprocurement.com/21tips. That's artofprocurement.com/21tips. Okay, well, today I want to talk about procurement's role in risk management. And it's a topic that I want to cover really in some really considerable depth over the course of future episodes in 2016 of the Art of Procurement. Today I'm going to keep things at a relatively high level. But you may recall from episode 3, all the way back episode 3, and I actually referred to this episode last week talking about CSR, and it was with Jeff Talbot of SIG. And Jeff was talking about the key activities, the key priorities for procurement for CPOs in 2016. And along with CSR, Jeff talked a lot about risk and risk management and it being a way that procurement can provide real value over and above just typical measurement of cost savings. So to give some context on risk management, let me go back to 2008, and this is a personal story. So it was the height of the collapse of the financial services industry. Companies like Bear Stearns and Lehman had both filed for bankruptcy. You have the US government seizing control of Fannie Mae and Freddie Mac. And banks, mortgage companies, lenders, insurance companies, they were all going bankrupt all around the world. At that point, stock markets were also a couple of months away from reaching their bottom, and it got so bad that the US government had enacted Tarp, so the controversial Tarp Program, to help companies stabilize, to help stabilize the financial services industry, because it was really in dire straits. So while this was playing out, I was happily employed by a CPG firm, and they were involved in growing and selling bananas and salads. So the kind of business that's pretty much as recession-proof as you can get. I was, prior to that, in automotive. Being inside automotive, you could kind of feel that there were challenges ahead, so I was to jump somewhere that was a bit more of a safe haven. But something that's been pretty consistent throughout my career is that I've always really loved a challenge. And so December 2008, here we are, the financial services industry is kind of collapsing around me. We're at the height of the crisis. I decided, for better or for worse, to jump right back into the middle of it. And I joined a captive automotive lender turned mortgage lender. And honestly, it was kind of teetering on the brink of collapse. And when I joined, it was really so close to the precipice that it was only an injection of funds from Tarp 3 weeks after I joined. So I wasn't even sure if my first paycheck would cash. That really saved the company from insolvency. What they did is that they decided to pursue mortgage lending as a way to get additional revenue over and above what their bread and butter was, which was automotive lending. So I did know the move was risky, but I didn't really know how risky. Fortunately, with TARP funds, the company lived to fight another day, but there were substantial strings that came attached to that. And as a precursor to getting those funds, we had to become a bank holding company. And as a bank holding company, we were now subject to really a myriad of US banking regulatory requirements by regulators such as the Federal Reserve, the FDIC, just to name a couple. So, in effect, all those regulations really just meant one thing as a company, and it was around management and mitigation of risk, which is kind of where my background and thinking of risk comes in. So, from a procurement perspective, we really had to do a complete 180 turnaround on how we looked at risk throughout the procurement process. Previously, we would do some financial health checks here and there. There'd be some one-off risk management activities. We'd look a little bit at business continuity. But frankly, it was on a case-by-case basis, and it was really inconsistently applied. It depended on, a lot of times it depended on who the buyer was, and it depended on how much just kind of gut feel there was for risk as you brought a supplier on board. With being financially, by being regulated by the Federal Reserve and by the FDIC, for example, we now had to build a lot more consistent and systemic approach to identifying, to managing, and to mitigating risk across our universe of really, I think what was, when I think back, tens of thousands of suppliers. It really seemed like an enormous challenge to go from not really being too concerned about risk to having risk at the core of everything that we did. What that experience did is, it allowed me to see and experience firsthand how you build and implement a risk-focused procurement program. And also the difference between what we thought was a typical, or what I certainly thought was a typical approach to supplier risk management at the time, and what risk management can look like, maybe what it should look like. Not necessarily saying that what you have to do in a regulated environment is for everybody, but it certainly can teach us some lessons about kind of the risk factors that you should be looking for and how to build a program around managing and mitigating those risks. So with all that in mind, again, as context for the discussion on risk today, I wanted to really summarize 9 different risk factors that we built our program around, and that I think that if you start thinking about these risk factors as you enter into engagements with suppliers and as you manage supplier engagements, it really helps to extend your and our, by association, the procurement value proposition to focus on risk rather than just focus on savings, as an example. I do this, again, not to say that these are all relevant to your situation, but really to start the thinking about how we as a profession should really be thinking about risk and, how what's important from a risk perspective, what could we be doing different. As a side note as well, I do want to say that how you go about implementing risk programs, that will be the focus of much more detailed shows I intend to do over the course of the year. Today, I really just wanted it to be a primer to start thinking about the risks that you should be monitoring, along with some examples of what could occur if you aren't monitoring each specific risk. Okay, so there's 8 risk factors I want to talk about, and they're in no particular order, so not in order of importance. The first risk factor is geopolitical risk or country risk. So geopolitical risk, that occurs when there's events within a certain country or a region. They may impact the ability of your supplier to provide the goods or services that you've contracted for in the agreed time frame or to agreed quality levels. And so a couple of examples of geopolitical risk, well, that includes perhaps there's an act of terror that grounds the local transportation system in a particular city, and maybe employees of your supplier are unable to get to work. Another could be a retaliation to a trade policy that might be enacted by a local government, or immigration policies, visa policies that just impact your either your ability to get the people that you need, or they may increase the costs associated with the purchases that you made in that country. Another example might be a weather event or a natural disaster that could take down the electricity grid, or really close down the office of the company you're dealing with or the manufacturing plant for a prolonged period of time for all suppliers that are in that particular area. Finally, another example could be around local union members, as an example, blockading ports or airports in response to really anything, but usually due to government interventions or policy proposals. So that might impact your ability to transport goods from that country, leading to shortages if you're in the manufacturing industry. Second risk to be aware of is concentration risk. And that exists when you have a lack of diversification across your supply base. And, lack of diversification can occur in many different scenarios. It can be sole sourcing a critical component or a critical service to one individual supplier. Or it could be, and this is an interesting one, because often, you look at using multiple suppliers to diversify your supplier base, but the multiple suppliers you may have diversified to may all be located in the same geographic area. An example may be call centers. You may have a number of call center providers who are all based. You used multiple suppliers to make sure that you've diversified your supply base, but they're all providing services to you out of Manila in the Philippines, for example. So that could be an example of lack of diversification, is just if multiple suppliers are in the same city. Some other examples are, we talked about sourcing a number of goods or services to a single supplier, so you have over-dependence on a supplier. We talked about location. One example we didn't touch on was you may source a variety of different suppliers, but then those suppliers may subcontract part of that work to the same subcontractor, which means that there's concentration risk particularly involved with that one single individual subcontractor. If there's an expert in the field that does one thing that everybody's using, that's just you're not aware of it when you're sourcing your tier 1, but your tier 2s may all be concentrated with the same supplier. Another example of concentration risk may be that you represent too much of a percentage of total business for any given supplier. So that supplier has too much dependence on you, so that ultimately the knock-on effect is that the stability of the supplier is directly related to your stability or the relationship that they have with you. And concentration risk, often, because it's hard to kind of measure, it often goes undetected. So it's not unusual that a strategy to avoid one kind of concentration risk, as I mentioned, using multiple suppliers, inadvertently leads to another kind of concentration risk, which is geographic concentration risk. So things to be cognizant of as you start thinking about your concentration risk. So the third risk I wanted to discuss is strategic risk. And this risk, it occurs as a result, honestly, of poor internal business decisions. As procurement, we can help implement more consistent approaches to supplier identification, to supplier management that help minimize strategic risk. But and I think that's a key role that we play, or certainly a key role that the policies that we help put in place and help organizations comply with drive towards the mitigation of strategic risk. And some examples of strategic risk might include that you are sourcing a product or a service to a supplier who offered the lowest cost, but that supplier has no experience in providing that product or service to you. So as a result, they're not able to provide what you've asked for at the quality that you've required, or they may require price increases to bring the quality up to the required standard that you need that just wasn't foreseen when they quoted on the business to start with. Another one, maybe you choose a supplier and the supplier is experienced at providing that product or service, but you're not providing to them any oversight of what the engagement is going to look like. And as a result, the supplier might provide goods or services that aren't the quality that you want, that aren't in line with timelines that you need. So it's essentially the need to put in place strong SOW and strong KPIs, strong metrics to make sure you're measuring what's important to you. Not doing that is definitely a flag for strategic risk. The next risk factor is reputational risk. So reputational risk, as it sounds, is something that where there's actions from either you directly or those of your supplier that might cause negative public opinion. And a couple of examples there may be that your supplier is providing poor quality goods and services. We mentioned that in a couple of other risk factors, which leads to complaints from your customers. Another example may be that your supplier, and we see examples of this in the news all the time, supplier may be using either directly or through subcontractors underage workforce, as an example, to provide goods or services that are ultimately provided to you. And the media breaks a story about this and links that workforce to your brand, which then leads to negative public relations. That would be a reputational risk. The fifth risk factor that we should be protecting our companies against is compliance risk. So compliance risk occurs when either you or your service provider doesn't comply with local laws, or when the service provider doesn't have the adequate controls in place to make sure that their employees comply with the internal policies and procedures that they might have. And a couple of examples of compliance risk may be that for example, a member of your team pays a bribe to a local official for any reason, but maybe to speed up an export process, to get an approval faster, whatever it may be. But that would be, against local and international regulations and laws. Another example could be that to provide the services that a supplier is contracted to you for, they build an internal playbook that details process steps that needed to be taken to provide that services to you at the quality level that you expect and that you've contracted for. But the employees of your service provider haven't been adequately trained, and so they're actually not able to follow the required process steps. So that's another example of compliance risk to be cognizant of. Moving on, the next risk is a similar theme to compliance risk, and that's operational risk. So operational risk is more about you. It's important to note it's you rather than the supplier. And it's when you don't successfully integrate your processes and policies with those of your supplier, when you need to integrate them both, enable the supplier to provide the goods or services. So it may be that you outsourced a portion of accounts payable, for example, to an off-site service provider. They need access to certain documents, and they need approvals to pay at certain parts of the process. But your company might not have a formal process by which approval to pay, as an example, is provided to your service provider, which delays their ability to pay your invoices. Another example, which is a little less easy to define, but it's where there's change management required. And I have personal experience of this in the outsourcing space, that a lot of times when a procurement outsourcing company is brought in, and I'll just use that because it's something as procurement we're familiar with, that comes in to really drive change and transformation, then a lot of effort is needed on the side of the buying company to enable the outsourcer to be successful. And if you, as your company, bring in the outsourcer and kind of wash your hands of it and just point to a contract and say, well, you have all these targets, it's up to you to meet, we're going to take a step back, that relationship is bound to fail, frankly. So if you are taking that approach, then that's definitely an operational risk that you should really be cognizant of and look at ways to manage and mitigate. The next risk is probably the one that as procurement we're more familiar with, and that's financial risk. So that occurs when a supplier is unable to meet the obligations that they have, that they've contractually committed to provide to you, as a result of poor financial conditions, or perhaps it's because they're unwilling to provide what they contractually agreed to, because the cost of providing it is higher than was anticipated. So, an example, maybe they committed to provide a service or a product at a price that was too low, so they can't make a profit on the business. Maybe they did that because they miscalculated the amount of governance or program management time, or kind of the investment of time that was needed to get what they needed from your company, which means there's more costs on their side, so they're not making a profit. That obviously has a risk to you, because the business then becomes unattractive to them, and they will either come and ask for a price increase, or they may ask to terminate the business, or they may just kind of dedicate not their A-team, kind of lower cost resources to your account, which impacts the quality, or brings risk in terms of them providing the quality of service that you contracted for. Another one may be changes in foreign exchange rates. They may impact the price that your offshore supplier receives for what they provide, reduces their profitability, could lead to financial troubles, and it's actually nothing to do with you. It's just changes in foreign exchange that perhaps they haven't got a hedging program in place for. Another one could be that they are in financial difficulties. Ultimately, they may end up entering into bankruptcy protection. Could be, a lot of bad things happen when that occurs. You could have a court voiding their contract with you, and you are then left with having to find an alternative source of supply quickly, or having to pay significantly more from that company to get the product or service that you are contracted to receive from them. The final risk that I wanted to talk about today was contractual risk. And contractual risk occurs when the terms and conditions that govern your relationships don't have the right controls or protections in place to ensure you get basically what you're expecting, what you need, and that those controls might not mitigate any risks that may occur as a result of that relationship. And a couple of examples of contractual risk would be that from a performance perspective, you don't have those SLAs and KPIs in place that we talked about earlier. They may not be adequate, or the contract doesn't have penalties that incentivize the service provider to actually meet them, which is a big one. You may have them in there, but if there's no real incentive, and it's a relationship that's a transactional-based relationship, let's say, rather than something that's more strategic, then you may not be able to hold them to those because the penalties just aren't there. You don't have, unfortunately, I hate to use the word stick because I don't think that relationships should be based on that, but reality is sometimes they do, and maybe you don't have the leverage to force them to provide the services at the level that you expect. Another example could be in terms of data protection. The contract might not stipulate how data is protected and what remedies would be available to you in case of data breach. And obviously there's liabilities across all the contract that if you don't have the adequate level of protection, then that would be considered a big contractual risk. So that wraps up a summary of the 8 different risk factors that we as procurement can be helping our companies, helping protect our companies against. And this is really critical for me to procurement. Honestly, when I talk to procurement leaders, I find that most companies aren't helping their organizations protect against all of these risk factors across the board. They may be focused on a couple of areas, but certainly not all of them, and absolutely not unless they're required to do so by regulators. So, as you think about those 8 different risks, think what are you doing to protect your company against each one of those, and where are the gaps? I do know that there's a lot of information here, and it's sometimes difficult to digest content like this first time through in audio form. So there will be a transcript of the show available, along with show notes, so you can kind of read through this at your leisure. And that will be at artofprocurement.com/29. Finally, I'm going to include some of the US financial service regulations that talk about third-party or supplier risk, And in my experience, I found that those, certainly with the geographies I've worked with, and when I worked for that company I talked about earlier, part of my job was to implement a risk management program across all of our non-US locations once we'd implemented in the US. So my experience is that the US regulations are pretty stringent compared to at least the other geographies we worked in. So wherever you are in the world, I think that they're a good starting point. Again, not to suggest that they're relevant for every company, but I think it's a really good introduction to what you can and should be thinking about when it comes to risk management and how we can help our companies manage and mitigate risk. So as I talked about before, the show is really a primer for all things risk. I do intend to go into a lot more detail in subsequent shows and also to bring in some thought leaders in the space and some more subject matter experts on the interview shows of the Art of Procurement. So look out for those as we head further into 2016. If there's any specific questions you have related to the topic, then just drop me a line. You can reach me at contact@artofprocurement.com, or on Twitter it's just AOP Show. It's at AOP Show. Okay, well, thank you very much for sticking with me. I'm going to be back on Tuesday. I have another great interviewee lined up that I'm excited to share with you. And until then, be safe, and we will talk again soon. Have a great weekend.